And we're back. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, Focus Compounding. This is The Rundown, on air live with Vetla Forsland, all the way from Norway. Vetla, how was your week? How are you doing?
I'm good. I just had another exam and got one more left, and then it's all Christmas break. How are you?
I'm doing well. That's great. I'm doing well. How'd you do on those exams? I know you said that. Did you say you're a little bit nervous for it, or you had to study a lot for it, or something like that? Last time we
Yeah, I had
spoke.
to start studying for one of them like 2 days before, which is not, ideal, but it went well.
Good
It
stuff.
went okay.
Good
Yeah.
stuff. Tell everybody watching what type of hat are you wearing? What kind of hat is that?
Yeah, so this is a Norwegian company called Nell. It's a hydrogen company, and it's basically been one of the favorite retail stocks in Norway for several years now. And the stock has gone bananas this year. I think it's up like 300 or 400% year to date. Just think of it like Norway's Tesla, basically.
Yeah.
It's like the poster child of the ESG bubble. And this was a Christmas gift from a friend of mine, and it basically this is the name of the company, Nell, and here it says, price target $0 per share, which I thought was funny. This is the best Christmas gift in years, to be
No,
honest with you.
that is hilarious. I've seen a couple hats before. Like I've seen Lehman Brothers, I've seen
Yeah,
Tesla Q, which we're gonna talk about Tesla today. So that's funny. I love merch that's like finance related. I think it's so fun.
yeah. I
And then
wanted to
like if
get one of those Lehman Brothers hats, actually. I wanted to get it, but now I have this, so I don't need it.
it's cool because if I saw somebody wearing a Lehman Brothers hat, I'd be like, I know nobody else probably understands why you're wearing the hat, but I know why you're wearing it. So it's kind of
Right.
like, if you know, you know. All right, Vetla. So yesterday, Airbnb went public. Their original IPO price was $68 per share, which was a valuation of $47 billion on Wednesday. And then the stock started trading Thursday, and it opened up at $146 per share, which is a $100 billion valuation. Do you have any thoughts on this? And we'll talk about Doordash as well, which happened like a day before when the stock opened up much
Right.
higher than the original IPO price. Any thoughts on this?
So we had two of the largest IPOs of the year. I think Airbnb is definitely the largest of the year. And basically, on the almost the same day, and both of them just blew it out of the water and opened up, 100% up or something like that.
Yeah. Mm-hmm.
What's interesting is that I was talking to some friends about Airbnb like the day before the IPO. And a friend of mine, he sent me a link to this, the blogger called Aswath Damodaran.
Oh, yeah,
So
absolutely.
he kind of made his own valuation of Airbnb, and he basically just said that, well, if the company is priced at below 30 billion, it's a bargain. If it's a price between 38 and 35 billion, it's a solid buy. If the equity is priced above 44 billion, it's overvalued. And here, 2 days later, it's valued at what, 100 and something $billion.
Yeah. Mm-hmm.
There's just so many crazy things about that. Like pre-pandemic, it was worth 30 something $billion, and then they needed to have an emergency debt offering, and it's a travel company and it's worth 3 times the amount that it was worth before the pandemic, which is just ridiculous to me.
Yeah. So, I mean, call it, they're doing, I don't know, you could call it in 2019, pre-pandemic, they're about 5 times. I'm sorry, they were at about 5 billion in revenue. So at $100 billion valuation, and that's pre-pandemic numbers. The first 2 weeks when the pandemic was happening, revenues dropped for the company about 80%. And, the company went in full on crisis mode, obviously. And they laid off, I think, 1,000 staff and did a bunch of different things. And their revenues, everything's been, slowly climbing back. I want to share this video, and hopefully people watching can watch it with us. Let's see if I could share my screen. I thought this was pretty funny when Brian Chesky, a CEO that, by the way, I actually really like I'm really happy for them. I like the company. I like Brian Chesky. Can you see my screen?
Yeah.
Okay, cool. So I don't know if you'll be able to hear this. Hopefully you can, and hopefully the people watching can. But this is basically when he found out the IPO price, the opening price that Airbnb was going to open up at. This one is definitely going to go down in the record books.
Now, we just got indication on your opening price. Shares indicated to open right now at $139 a share, which is more than double what you priced at. I mean, are you at all concerned about froth? What do you think about that number and the potential that you're leaving billions of dollars on the table?
That's the first time I've heard that number. When we, in April, we raised money, and it was a debt financing. That price would have priced us around $30. So I don't know what else to say. I'm very humbled by it, and we know that we're on a very long journey, and we're going to be very, very focused. And obviously, today is a very special day for everyone, but the higher the stock price, the higher expectations, the harder we're going to be working, obviously.
So
What's
funny,
This is literally the face that he makes when he realized he made $3 billion something dollars.
Yeah,
because he has a lot of equity too.
Yeah, absolutely. Yeah. I'm super happy for him. That video is funny. I can't say I'd react any differently. Be like, what words even find? He's just super excited or whatever. But
right.
I'm happy.
That was a shock as well. I mean, you didn't. Yeah. Nobody expected. I remember. You got the information as the day went on, and when you realized it was gonna trade at about $100 per share, minutes after the open, you were like, wait, wasn't this price at 60 something yesterday? Part
of him is definitely like, and he said it, Vela. He was like, the higher the expectations, the higher we're gonna have to work. But it's like, right. All right, congratulations, have your champagne for the day, but time to get back to work because they're pricing in some pretty strong growth going forward. But I've been a fanboy of the company. I read. I followed the company for a while. I followed his career based on like what's public. I in my head, I purchased one share of the company. I did not do that because we don't own anything outside of the fund. But I said, if I just as, being a fanboy,
your paper trading account is all in Airbnb.
Exactly. So I could put the stock certificate on the wall. So I, in my head, I did that. And I hope that they live up to their expectations. I love Airbnb. Yeah. I use it all the time. How crazy is the concept? Remember when you first started hearing about this, everybody was like, who would want to stay in somebody else's house, either A, when they're there, or B, just in general, it was such a foreign concept. And Airbnb kind of came up with Uber and Lyft. And I always liked Airbnb a lot more than Uber and Lyft and stuff like that.
It's basically institutionalized couch surfing. That's what it is. And it's funny that you say that about Uber and Airbnb, because I totally agree. And so does Bill Gates and, many other smart people, because there just seems like if you can call it a moat, the moat around Airbnb is so much stronger than all of these other sharing economy companies. I'm just going to share a little bit about what Bill Gates had to say about Airbnb a couple of years back in an interview with Buffett and Munger, actually. And so Becky Quick asked Bill Gates what tech company he would put into his fantasy technology league. And he basically said Airbnb, even though it wasn't public yet. And he said that Airbnb is a strong long-term business because they serve customers globally. And so the reputation they have is powerful. You can't just go into a city like you might for a ride service and do a lot of marketing and bomb the prices. In this business, you have to have a global reputation, global inventory. So it just makes it difficult to challenging that leader position, which absolutely makes sense. And when you compare the market that Airbnb operates in with the market that, say, Uber Eats and Doordash operates in, it's a very crowded market. And it seems more like a race to the bottom thing than what you can do with Airbnb. You can't just launch a company and then go into Portugal and then cut prices to, the bare minimum and then just take over that market. You need to have a global reputation because the people want to go on a vacation globally, not just in one place, right?
Yeah, that's cool. And so these on-demand businesses, whether it's Uber, Lyft, DoorDash, Airbnb, it's so fascinating to me. It's really even changed the way, everyday life, of course, but like for Geoff and I, when we go on research trips and we always like to drive, we never know where we're going to stay. Basically, the way that we handle it is, it's as long as I could drive until I get delusionally tired. And then I pull up my phone and whoops, my mic just fell. And I pull up an app called Hotel Tonight, and it basically just finds like the cheapest or best rate or whatever of hotels around you. So, it's just fascinating. I mean, the whole idea of, could you imagine having to think about ordering a taxi and stuff like that nowadays? It's just, and these companies are like, what, 10 years old, 12? Huh?
We don't have Uber in Norway.
I know, but I'm saying you've used an Uber though when you're in the United States, right?
Oh yeah, I use it all the time. I even got like a monthly
like a pass
special
subscription
offer.
Thing.
Yeah. So I could take an Uber across San Francisco for like $3, which was just ridiculous. With a taxi, at least in Norway, it would be like $50 or something like that.
Yeah, my favorite Uber ride, I'm being kind of facetious, when I was in this time actually last year, or around this time last year, I was in New Jersey with Geoff because we were going to a Willow Oak meeting to announce the launch of our fund. And on the last day there, we were there, I think probably for, 5 or 6 or 7 days. The last day there, after, we met with so many investors and it was just a very long week, I had a buddy that was in New York City that I was going to meet up with and go grab a drink at a bar and just hang out, catch up and stuff. And I think I Ubered back to New Jersey from New York City at 2:30 in the morning. Something like that. It was like $150 Uber. It was crazy. Geoff offered, He's like, I could, come pick you up. And I was like, whatever. I'll just Uber back and it'll be a lot easier. But yeah, so there you go. But what, no need to even think about it. Cause I'm like, I know I'll be able to get an Uber and go wherever I want to go. Right. Crazy.
Right, yeah.
Speaking of crazy, IPOs, Doordash, as you said, they also went public. Doordash skyrockets in its market debut, closes up 85%, giving the company a value of $60.2 billion. The stock began trading at $182 per share and closed at $189 per share. It was originally priced at $102 per share Tuesday night. So these people that actually get these emails from their brokers, if they want to buy some stock, the day before, it's like, boom, you made a ton of money overnight.
Yeah, if you can get any, and that's if you can get any shares, because
that's what's going on Twitter. Everyone's like, check your emails, because you get them maybe from your broker and you just delete it really quick without looking at it.
Right.
But yeah, Doordash reported $1.9 billion in revenue for the 9 months ended September 30th, according to its IPO filing. That's up from $587 million during the same period last year. And they're still not profitable. It says as revenue grew, Doordash also narrowed its net loss to $149 million over the same period in 2020. In 2019, Doordash had a net loss of $533 million over that 9-month period, Bella. So pretty crazy. Pretty crazy. This is just like a rundown about crazy valuations, because the next topic, Bella, we're going to talk about is Tesla.
Right.
First, we should say Elon Musk has now moved to Texas.
He has, yeah. Did you watch that interview he did with Bloomberg, I think, or Wall Street Journal?
No.
Me neither. I just saw that's where he said it. I haven't seen it, though.
Southern Texas. So
nice.
Wherever their SpaceX launch thing is. So he officially moved to Texas. For a guy like him, right? He can jet back to California like every single day if he wanted to. And it's probably what he's going to do is go back, often. But he can run, I guess, his, there's a lot of tax incentives to be in Texas.
Right. Yeah.
So,
and, there's a lot of reasons. Like people are saying that there's kind of like an exodus away from California because of taxes and homeless problems and all that stuff and politics, etc. Joe Rogan moved out of there. I don't have any thoughts on that. Yeah. I don't have any specific thoughts on that. I think it's kind of, I haven't been to Texas. I've been to California, and I feel like California is by far the best state. When you look at wilderness and the beaches and the cities and all of that.
Totally.
But the taxes does seem
I'm bearish. I'm bearish on California because everyone's leaving, but selfishly I'm very bearish because then I hope they start to do things to incentivize people to come back, because I love it. I think California is beautiful. I call it the most beautiful broken state in America, So, but anyway, so he lives in South Texas. And next week on December 18th, it's going to be added to the S&P 500, Tesla.
Finally.
And it's going to trade on December 21st. It would be a 1.5% weighting to the S&P 500. And here's my question to you, Vela. Tesla is up 667% year to date. That's when I typed this. I don't even know what it's up now, but it moves so much every day. 667% year to date. It's trading at more than 161 times next year's earnings. And the company has only had 5 consecutive quarters of profitability, Vetla. It's currently 20 times EV to sales, not electric vehicle, enterprise value to sales. So my question is to you, right, is should index committees, right, should they take valuation into consideration when adding companies to the index? Because isn't forcing index investors to absorb these incredibly high multiples, isn't that the exact opposite reason of why people index? Otherwise, index investors, I feel like majority of them would never pay such high valuations. I almost feel like they're doing the complete opposite of why people index in general, you know?
Well, an index fund is more or less, a mirror of the overall market, or at least the market for the largest companies. So if the largest companies are overvalued, then I don't really see the problem. But I did, there was a lot of talk about Tesla going into the S&P 500 this summer when they checked all those boxes necessary to be included in the index, and they didn't include it. And I thought that was because of valuation. Like they basically did a chief decision and said, we're not going to include Tesla because it's valued at, $300 billion or whatever. Yeah. And then maybe they just gave in to the pressure since the bubble lives on, or whatever you want to call it, 4 months later. But I don't know how it works, how the inner mechanisms of the index fund structuring works.
Well, I believe it's like a rebalancing. So they'll have to rebalance into Tesla.
Right. So there's going to be a lot of demand for Tesla shares. So, the stock is rightly up a lot. And I think one interesting thing, though, is that, Tesla will be by far the largest company to ever be included to the index. I think it will be like the 6th largest company or something, maybe more.
Yeah.
Right. But the way I look at it, though, I feel like it's kind of a top sign. I feel like this happens all the time. In 2000, I think you got, a lot of those huge tech bubbles, including the S&P 500. And you just, I feel like this happens every single time. And this is just the ultimate top sign. And what Tesla should do is basically to just dilute their stock as much as possible. They have the most valued currency in the world right now. That's your own stock. And I think Elon Musk, he's laughing all his way to the bank. He knows that Tesla is, can't justify this valuation.
Well, he talked about it.
Not for, 10 years.
I think he basically said if another car, company wants to come after, their business, Tesla would basically like crash, or he said something alluding to that, right? Because they're such thin profitability for the company, if you even want to call it that.
Exactly. Yeah, profitability, and it's mostly from separate credits and stuff like that.
Yeah.
One interesting thing, though, I don't want to take his name up every single time we do this, but so Michael Burry is short Tesla. He went short, a couple of weeks ago.
Yeah.
And he said to Elon Musk in a tweet, he said, seriously, issue 25 to 50% of your shares at the current ridiculous price. That's not dilution. You'd be cementing permanence and untold optionality, whatever that means. If there are buyers, sell that. And he's totally right. But I don't think there are that many buyers. People have been talking about how Tesla needs to dilute their stock, for all year, basically. And Tesla has come with a couple of dilutions. I think they issued $5 billion worth of stock last week. And they did the same this summer, and then they did the same before the March crash, I believe. So they're slowly diluting their stock in a way that doesn't scare off investors. Because if they issue 25% of the shares overnight, or 50% of the shares overnight, then the stock's going to crash.
Mm-hmm.
And it's also.
Do you think Elon Musk is going to start selling some? I mean, his net worth was like 20 billion at the beginning of the year. Now it's like 100 and whatever. He's like the 3rd richest person in the world now.
Right, second richest person in the world. Yeah. So I don't think he has unless he has let that valuation get to his head. I think he knows that it's just a paper figure that he can't really do anything about.
Yeah. No, he definitely knows.
So I don't think he can sell. His shareholders wouldn't accept it. He would, lose a lot of cult followers, and I think he knows that. I think he knows that, and I guess that's the downside of basically having all of your net worth into one stock, is that it's not real money. It's like it's not liquid. You can't really take it out anytime you want.
Yeah, I remember when, and again, who knows how much of this is true, but there's a story out there about Elon when he was worth, I don't know, on paper, a significant amount. And I think this was the point when he was asking friends and family for rent money and stuff like that. And I think he said it to his brother. He's like, dude, he literally said like, dude, that's not real money, right? It's like, that's not cash. That's what you are on paper. And it's so funny. If you ever listen to interviews with Portnoy and they talk about money, he always says on paper. And it's true. I mean, on paper, you're worth that,
Right.
Doesn't mean cash.
One more thing I wanted to say.
Yeah.
Tesla short sellers, year to date, has lost more than the US airline industry this year combined. Just the short sellers than the entire industry. That's insane.
Can you imagine? I mean, it's crazy. We've been talking about Tesla being crazy expensive for, a very long time. The stock is up this year. It's up over 600%. That's crazy. Like Munger said, if you could see him right there, don't underestimate the man that overestimates himself. But it's just like, shorting is just such a tough game. I just don't know. Could you imagine? You'd just be like screaming at your screen all day.
I mean, we have a community that screams at the screen all day. It's called Tesla Q. So
yeah. If that's where you want to go, and I don't want to say certain names on Twitter, but I don't follow them anymore because it's just all so negative. I've talked to you about this, fella. This is why I don't like. Yeah. I was extremely turned off by Tesla Q when, I don't remember if it was Easter or what, but Musk was hanging out with his family and a picture of him, his brother, and his sister and his mother got uploaded on Twitter or whatever. And it looked like a very nice family picture and people were just trashing them. And I'm like, just like, it's so vicious and negative. And when you are hoping for a company to fail, it's like every little thing you just absolutely hate about, the company and the person and stuff like that. And it's just, I don't know, not a way that I would want to live my life,
I know. And there's like no middle ground there. It's just like Elon Musk is a huge fraud. Everything he does is a fraud and he's a horrible person and his mother is a psychopath. It's just a bit ridiculous.
Yeah.
But I mean, of course, not all of them are like that. And they do post a lot of great research.
Yeah.
Unfortunately, it's not relevant to the stock. But they do post some great research. If fundamentals matter, they could have been right.
Has there been a takeaway from your, situation watching from the sidelines? Because you don't, own stock, you're not short anything. Has there been a takeaway that you've had from this whole Tesla situation?
A take?
I mean, just like something that you learned from it.
Right. Well, that basically I don't understand. I can't. What I learned was that I can't have a take on this company. I used to have, kind of a take on it. If people asked me my opinion on Tesla stock, I would kind of give my opinion. I stopped having an opinion on Tesla like this summer. It's like I just gave up. I don't understand it. I don't know what's going on. This is just, I'm not going to touch it. I'm not going to short it. I'm not going to buy it. This might be you might make a lot of money on it. I don't think so, but I don't know what's going to happen over the next year or the 2 years or 5 years. I've basically just really been on the sidelines for the past 6 months and just, observed it, but not really made anything out of it because I just don't understand what's going on. So I don't know. What do you think?
Well, my biggest takeaway was shorting is a very tough game, right? Then there's this other saying that I've heard before. Do you want to make money or do you want to be right? And sometimes those two things are completely different things, right? There's not a lot of correlation there at all times.
Yeah. And what's interesting about that, have you read The Big Short?
Yeah, read the book. I've listened to the book and I've watched the movie.
Yeah. So Steve Eisman in the book, he's portrayed as a guy who, honestly cares more about being right and kind of sticking it to the financial elite than actually making money for his clients. Which is, a horrible trait as an investor. And they even said his head trader even said that Steve Eisman gets emotional when he trades.
Mm-hmm.
That's horrible. You should never get emotional in trading. He did that. That's a mistake. He still made a lot of money, but it's definitely not something you should do. And I think that's what a lot of these Tesla Q people kind of have become. They've kind of made this trade into a fight against the current bubble, I guess you could call it, which leads to irrational choices.
Yeah. I mean, it's interesting. I have noticed on like Instagram, for example, people posting pictures of or screenshots of their Robinhood account where they own Tesla in there. And these individuals I know have really never owned or been involved in the stock market at all prior to either this year or, call it the past 14 to 16 months or whatever. So it's definitely a huge cult following stock.
Right.
And
the worst thing though is that they're outperforming us.
Yeah, and that's true. Like, what do you say, right?
Yeah. You remember Kathy? You know Kathy Woods, right? From ARK Investments or whatever, who had that crazy $3,000 price target like 4 years ago.
Yeah.
I remember making so much fun of this, lady. I was just thinking she was crazy, and now she's right.
I think Chamath, he also came out, I think, at a conference a couple of years ago and said Tesla was worth whatever, and everyone was like, "What?" So it's, I don't know, it's crazy, Bella. Last topic of the day, you wanted to talk about a tweet that you sent off on the gaming industry, and you are a big bull on gaming. Is that the tweet that you wanted to talk about?
It is the tweet I wanted to talk about.
Let's hear about it.
Right. So it's just a PSA, public service announcement. Our friend Talbot, he tweeted, a podcast episode about about a deep dive into the video game industry and how the business model of video games that is emerging right now just consistently makes a lot of money. And I subtweeted that and basically said that I'm bullish on the gaming industry as a whole. I feel like it's hard not to be. The estimated CAGR there is something like 13% through 2027 as, gaming launches into new devices. You got new streaming stuff coming up, new kind of experiences. You got different platforms from social media gaming to console gaming to PC gaming, new monetization models through, microtransactions and stuff like that. It just seems like there's huge tailwinds going on for that, for the video game industry to grow a lot and kind of become the main entertainment medium of the next generation. So, I usually don't look at things from a top-down perspective, which I kind of did there. But when it comes to video games, I kind of have like a take on the whole industry, but I don't really know that many, at least video game developers and video game publishers of individual titles. So I basically just asked Twitter, are there any decent video game developers out there that I should take a look at besides the major ones like Activision, Take-Two, and Ubisoft, etc. And I just thought it turned out to be a great tweet for looking for different picks within the video game segment. You got some French mid caps there. You got some great takes on Zynga, and I just feel like if you're interested in the video game market, if you're interested in investing in video game stocks, then you should take a look at the tweet and see for yourself and maybe research some of the companies that are mentioned there, because there's a lot of great stuff going on there. And I tweeted that, this morning, so I haven't had the time to really look deeply into all those different companies that were mentioned. But I'll definitely take a closer look, and I think anyone interested in the market should do the same thing. So that's basically what I wanted to say.
Cool. Well, that's a good PSA, and I will put that tweet down below in the about section. You can also follow Vetla through going to his Twitter and hitting that follow button. Well, Vetla, I want to thank you so much for coming on today. Thank you to everybody for joining in with us on today's episode of The Rundown. Make sure you hit that subscribe button. Follow us both on Twitter, QuickFS. Go to quickfs.net if you want to pull long-term financials of a company. Anytime I'm looking at a new business, I download the financials, and it's great because you can see how the business has evolved over time. My favorite thing to do, Vetla, actually is look at the market caps and see how like different growth rates affect the market cap, different, changes in EBITDA and stuff like that. And just look at the company's history from a bird's eye view. So it's really cool because you don't have to spend lots of hours inputting it all into Excel yourself. So go to quickfs.net, tell them you came from Focus Compounding. If you do sign up, Geoff and I use it every single day. A lot of people that follow Focus Compounding use it, and it's a great platform. So I want to thank everybody so much for tuning in with the both of us, and we will see you in the next rundown.